Let's quickly navigate now to the fundamental side of the story. It is an important day ahead of the two big triggers. What's the scenario likely to be? What kind of strategy now you should be looking at? Let's find the answers out from Sandeep Raina, who's the Executive Vice President Research at Nuvama Professional Clients Group. Morning there.
Right.
All right, let's start off with the basics first. What do you think the strategy should be? Should we be more at the investor need to be more on the sidelines ahead of the two big triggers, that is FOMC meeting, along with that interim budget, which doesn't seem as interim given the expectation of continuity of the present government? That's one. And also themes that one needs to watch out for on the crucial day and on the penultimate day in the run-up of interim budget also.
See, there are two ways to look at this. One is continuity. See, being a fundamental analyst, I don't think so there's any problem with these two events. These events will be a noise which will trigger something just for a week, and then again market will go back to normal. Now, just for example, interim budget. I don't think so there are too many announcements that can happen because government asset is doing so many things on the defense side, on the railway side, on the infra side. Maybe there can be some tweaking. Maybe there can be increase. Like there's a news that defense budget expenditure will be increased. So be it. But we all know that, right? And we know the corporates, the company which are operating this business, they're doing very well and they will continue to do well. So having or saying something incremental will not make a big difference out of it. And again, saying that it will just be a noise. Again, coming to FOMC, I don't think so there is anything that will happen today. This is a long way for this year. We have more 11 months to go. And yes, there is a buzz that there is a rate card that will happen in 2024. Yes, it will happen, but it will not happen now. And I don't think so. In 1 or 2 months, we can expect a rate cut because there's so many things happening in the world. And I'm sure the governors will be waiting to understand what is happening right now. So I don't think so. It's a very big event given the side if I'm looking for, 1 or 2 years perspective. Yes, if I'm as a trader, then I have to be cautious. Then I should be a little light because I don't know what will happen because there can be a difference of 3 or 2% in the market. And that's a big one for a trader. But for us who are into long-term investing, I don't think so that makes a lot of difference.
Point well taken. Also, the near-term volatility in equities around the union budget has overall been declining in the recent years, especially post the GST implementation. Having said that, let's talk about the sectoral expectation. Which themes essentially that you think would be in focus this time around? Would it be more from the personal income tax angle? Are you looking at the revival in the rural agri demand or the relaunch of PMA, increased spend of affordable housing? What exactly will be in focus for you?
Again, see, as I said, these are all ongoing things. There can't be a 30 or 40% allocation increase. That has never happened. Yes, there can be 5 or 10% allocation increase, which again is a big number. Now, having said that, I think government will continue in terms of doing investments in infra side. And when I say infra, it's a function of road, it's a function of ports, it's a function of defense, railway, and everything. The power sector, which actually needs a lot of money and capital, and in power, specifically renewables. And I think this budget again will be focusing on all those elements. Now coming to personal finance, I think there is a lot of buzz of saying that income tax slab will be increased. Trust me, again, doesn't matter too much. Maybe you will save some money, but that will not change the dynamics or the direction of the market. These are something which you'll read, and trust me, you'll forget in the next 4 to 5 days because the impact won't be very strong. The impact of the budget is only in terms of spending the government wants to do on the infra side. And I think that will the focus again. This government has been focusing only on that in the last 10 years. And of course, they have done a little tweaking here and there, but the big picture is investments from the government side. And I think this will lead to private spending coming back, and which actually has happened in last 1 or 2 years, what we can see from the data.
All right. Especially, I'd want to chat about financials and the consumer staples. A bit from the financial side first. Are you expecting what are your expectations from the interim budget when it comes to the financials, NBFC, banks, and just deferring that? I mean, let's just deviating that from a bit. HDFC Bank in the recent past hasn't really done too well. We've seen the stock cracking a bit too much after the earnings have come through. Of course, the feedback across the investor community that we are getting, at least from FII and DII, seems to be a little divergent. But what's your view on the financials?
Okay. Again, it's nothing to related to budget, but overall, if I understand of the banking results, they are not in great shape. See, banking did very well in last 5 to 6 quarters, and we can't expect them to do well every time. Now, if I talk about the problem right now, I think CASA is not increasing. The term deposits are increasing, right? Also, if I look at the credit growth, it's reasonable, but my NIMs are contracting a bit, just 10 or 20 bips. So that is what is happening right now, which is impacting the banks. And now thing is they're expensive, they're not cheap. We have to understand right now, if I just look at market are not very cheap. Not, I'm not saying they're expensive, but they are in the upper band of the expensive bracket, or what we say are the P ratios. Now, having said that, we need to understand that a small mistake also will actually led to a lot of correction, and that is what is happening in the banking sector. I think it is just that the kind of valuation at what these companies are or these banks are, a small mistake or a small number change also impacts the stock price, and which is happening with most of the banks. And again, it will change again, because in 1 or 2 quarters when the names will come back, which eventually will, things will change for a good reason. So I'm not worried. But yes, there can be a pause, which is happening of late if you see.
A bit of surprise which is coming from L&T, which of course is the economy facing stock and also bears the good news. The earnings haven't really been very encouraging. You're seeing that stock performance pretty much reflecting the kind of performance thrown out by the company for the December quarter, but it's raised in the revenue and the order inflow guidance. So net, we're looking at stronger outlook commentary coming in from the company. How do you read into it?
See, for any company, results are past. Trust me, that is how we look at it. What is most important is what is the commentary. And more than the commentary, it is important we need to understand when the management comments and the ratio of delivery. That is how you do for every company, right? So basically, that is part of corporate governance also. Now, for L&T, of course, if you listen to the con call and the management commentary, they are talking about very big numbers. And I think that is the reality that will happen in the stock. And for that matter, every infra company will do well. Of course, we need to understand the company has to be in the top bracket when you talk about the numbers in terms of ROCs, in terms of margins, in terms of projects they deliver. So all like that. But I'm saying L&T is the top notch. And I think I'll be a buyer right now in L&T because I know the commentary is very good. Going forward, they'll do even better numbers. It is just a 1 quarter phenomena where the numbers were not that good. They were not bad, by the way. They were just reasonable. And going forward, I think they will do much better.
Do you expect some slowdown to take place typically for the ordering activity due to the elections? How are you reading into it? Do you think the order book per se and thereby the execution and the reflection on the financials perhaps could take a little bit of hit, at least for the next a quarter or so?
Possibly, yes. See, I'll give you two answers for that. And trust me, see, generally, what happens in any market that is India, your Jan, Feb, March for the construction companies are very good, and in fact, that is like 40% of their total revenue for the year. So that will not slow down. Now, your question was that due to budget or due to election, rather, will there be a slowdown? I would not think that. In fact, I will think the other way around, because government will have to close down their books, their spending by 31st of March. So infra will pick up further. It should not stop.
Railway, defense themes again, PSU related stocks will be in the limelight on the interim budget day. Overall, what's your scenario? What's your assessment there? Are the valuations a bit too expensive as compared to the historical average? Would you recommend investors perhaps to even enter into these levels ahead of the budget, or you would expect the budget to shape through perhaps the allocation and the trend, and then probably pick up some amount of traction in these counters? How are you
So
looking at
I'll
it?
divide the entire thing into different sub-segments. Like for banking PSUs, will I enter? I think I will not. Now coming to PSUs which are into infra side, like on the defense side or on the ship side, shipbuilding side, I think I will not be shying away from in terms of investments. Like like a company like HAL or let's say Mastercard. I know they're expensive, but if I look at 5 years horizon or 7 year horizon, I will not shy away from investing in these kind of companies. But yeah, from the PSU banking side, which are the smaller banks, I think they are very expensive, and maybe I will not get into those stocks.
All right, that's the word coming in. Perhaps I'd also want to chat about Reliance disclosures there. It's owned by, the company is owned by RIL, that is, the network is owned by RIL, but it has been participating quite some for the last couple of days. Today also we're seeing a fair bit of traction coming in from RIL. What do you make out of it with the Geo Financial Services angle and with RIL put together? Do you expect more uptake coming in for RIL? How do you read into it?
See, okay, for RIL specifically, see, for any stock, we should look for 2, 3 years history. Now, if I go back 6 to 8 months back, before that 1 year, RIL has given a phenomenal return. And it's just that in last 6 months, I think the stock is kind of stuck in a range. Now, if I just extrapolate this and say that going forward, what will happen? I think it is a stock which will always do well. Yes, there will be lulls of 6, 8 months or maybe even more because the stock has done very well before that. And coming specifically to Geo, I think the strategy we need to understand what it is. Right now, it's not very clear. But knowing that how the management is capable of doing uh, big events or slash the kind of businesses they have built, which are very large, I think Geo also should be will be doing very well. It's just that we don't know what the expectations are because right now it's not in open.
So, in this interim budget, do I agree to the fact that it's a very near term and a short term call that I'm asking you, and you'd like to have a rather aerial perspective on this one, but just from a very shorter term perspective and more from the traders community, which are the themes and the stocks that you like to keep out on your radar in that case?
So you're asking which are the themes I should be looking at?
Yes.
So again, as I said before, it's always infra. So I have to see what the government will talk about on defense, what will talk about ports, what will talk about road infrastructure, because that is what government will talk about, right? And that is where the theme is. Now, coming back, will that impact my cement businesses? Yes, it will. But will it have impact on my consumption? Not really. Or let's say if there is change in the personal finance, yes, FMCG and those or apparel company will do a little better. So that is how we need to understand what the government will say in this. If they're talking about infra, then we have to go for companies which are in infra or maybe allied of infra, which is your cement also. Similarly, if we're talking about personal finances, then maybe FMCG and those companies are something which we should look at. So that is how we have to understand because that all depends what the government will speak on that day or the FM will speak on that day. But
Right.
broadly, again, I'll say that these are just noises. Maybe the impact will be for a week, but after that, market comes back to normalcy on bigger trends. That's how we have to look at it if we are going for long-term investing.
Point well taken there, but we're just going to leave it at that. And thank you so much for taking out the time and having this conversation
Yeah,
with us.
thanks, Floyd. Bye.